Let's talk a little bit about phase transitions. It is the most difficult thing for traders and investors to understand. So I think it behooves us to spend a little bit of time explaining what phase transitions are and above all, how you can recognize them. Okay, phase transition really is another word for cycle transition, and I am talking here mainly about the larger transition cycles, because we can't get into the minutiae of the smaller transitions. But of course, let's bear in mind what I'm talking about is a principle that applies across the board in all time frames. It is as relevant for intraday traders as it is for swing traders, and indeed as it is for investors. The big issue, as always, of course, is timing. How do we get our timing right? How do we know when the first grass seeds of change need to be acted on? So we've got two aspects here. First of all, how do we know it's changing? And then how do we know when the right time is to act? So the answer to that, as always, is twofold. You have the external element to it, which you're all used to watching on your charts, and then you have the internal aspect to it, and that is something which is rather more complex, and that is the reason why traders and investors of all kind of time frames are experiencing difficulties around these times of phase transition. Because first of all, they do not recognize in time when things are about to change, and that means obviously when things change, the first thing you do is you hold back on your trading. You trade less rather than more. You take a more observatory stance rather than being proactive. This is something where a lot of traders and also investors get caught out in. So they are basically jumping into the markets at the wrong times and exiting at the wrong times. Now, the internal thing is to do with honing your innate skills, your internal GPS, your internal antenna, for the want of a better word, that allows you to feel into the energy of a cycle. Every cycle has got an energy to it, and that energy can be felt long before it actually expresses in itself in tradable moves. What it does, though, it gives you a caution sign saying, right here, stop, hold back on trades. It's better to miss a trade rather than being caught out in the constant back and forth as a trade goes into a support resistance zone and trading, in ranges. Traders and investors lose money when a price goes into a range, and it's psychologically very, very difficult because you are in this no man's land area and you don't know what to do, but you have that feeling you need to do something when actually you should heed the feeling of uncertainty and say, right now I am not going to do anything. So the second part of this thing is, of course, how do we know? We know when we learn to listen to what our inner feelings are telling us. That's point number one. The second point is we are becoming more well versed and appreciative of our feelings when we understand universal law, when we understand how evolution in all areas works, evolution in ourselves as personal beings, as individuals, and of course evolution in the world at large, and that includes the markets. Again, the principles are the same, the laws are the same, but you need to be able to understand them and then relate them to what you need to do. And that is the thing that gives you trust. Trust in turn builds your intuition and your innate abilities, and you will be okay even if you miss a trade or you miss the last move of a big move. If you catch 30% of every trend, you are doing well and you will be beating every benchmark in the book. That much I can guarantee you. And this is what I am doing my utmost to get into your every single cell of your body so that you can actually live and trade and operate from that perspective. If this speaks to you, please check out my products on thebuddhisttrader.com, where you will find my books and courses and things, all designed to help you take this material deeper. Thank you for watching this video, and please share it if it spoke to you.